Welcome back to the black hole of real estate. And today, hey, let's talk interest rates. The Fed is going to be making some moves at the end of the year, and every step along the way, there's 3 more meetings to go. One of them, mid-September, which right now is going to be pretty timely for this conversation. And I'm going to give you some insight in my experience in the lending world as well as the real estate sales world, and how it applies to the rates that you might be getting. Hey, this is your host, Ron Wojciechowski, and interest rates, it's going to be a hot button issue in the last quarter of this year, for sure. Probably every month thereafter, but especially right now. Now, the whole world is expecting that there will be a reduction in a federal funds rate. The meeting of September 17th and 18th. I'm recording this a few days before, so maybe we'll see how my crystal ball works. We'll see if I'm right on this. I anticipate 0.25% will be the drop. I know there's talk of 0.5%, and I know that there's a lot of sentiment about being aggressive on that right now, but because they've waited so long, I think it's going to be 0.25%. We'll see. Now, that doesn't mean that if the Fed drops 0.25%, that the mortgage interest rate is going to drop 0.25%. See, that's the borrowing rate, the federal funds rate between banks, how they lend to each other. And along the way, that number gets chopped up a little bit. My suspicion is that if the Fed drops 0.25%, it's probably more like 1/8, more like 1.25, somewhere in there, will be the drop in interest rates. But let's not confuse that day that they make the announcement that it's going to happen the next day. I believe that markets are already pricing in an interest rate reduction. And here's where it gets kind of tricky. Let's suppose that some companies are pricing in an optimistic 50 basis points drops, a 0.5% drop. Let's suppose the drop is 0.25%. If we're pricing in interest rates today anticipating a 50 basis point drop, and it only goes down 0.25%, there's a world where the Fed drops 0.25% and rates go up. So depending on the lending institution, if they're guessing, if their experts are guessing there's a 50 basis point drop and it's only 0.25%, they've priced in too much of an interest rate reduction. They're going to have to gain it back someplace. So they're going to lose a lot of money. So it gets kind of interesting. Now, let's suppose that the institution's thinking that the Fed's going to not do anything and they drop 0.25 point. That other institution has room now to adjust the rates downwards. So even when the Fed, and like if you're anticipating 0.25 point and you get 0.25 point, but it was baked in the cake because you started early adopting and you were pricing this week based on your anticipation of it, that 0.25 point drop that we see next week, it's going to have a couple of outcomes. If they weren't anticipating any drop, one company could drop the rates. If they were pricing in a 0.25 point reduction and they were right, there may be very little change to interest rate because they already priced it in. And if they're projecting a 50 basis point drop and it's only 0.25%, well, guess what? That company's rates are going up. All right, and I hope that didn't lose you on that, but what I'm telling you is that just because the Fed drops 0.25 point or 0.5 point, it doesn't mean rates are coming down that, because every institution is already pricing that in. A lot of the stock markets and funds are also pricing it in. They're expecting it. I think you'll see the 0.25 point. I don't think it'll be a shock to anybody when it happens. And then they'll look to the next meetings. We've got November, December coming up. The next Fed meeting after that will not be until 7th and 8th of November. It's election week. So everything's going to happen around the same time. So this is the one Fed meeting that I believe is going to, if there was an impact on how people vote, this is the one that is part of the reason people think they might get aggressive and do 0.5%. It's not supposed to be political. They're supposed to be independent, but we'll see. I believe they'll do 0.25 point this one. I believe they'll do 0.25 point in November. And then in December, flip a coin. They may not do anything in December. I think there's 50 basis points coming off over the next 2 meetings. And we'll find out. I mean, I could be way off on this. There's a lot going on that affects this. But inflation and jobs and however they're reporting it, whether you believe it or not, has something to do with it. I think the Fed's been super conservative with the way they're monitoring this, because what they don't want to do is drop the rates in such a way that it undoes the work they've been working hard on, keeping these rates where they are. So you don't have to agree with the policy, but it is the policy that's being set forth. I just find it really interesting that when you look at what a mortgage payment is, a quarter point for some in some homes might be a $25 difference, $50 difference. And sure, it's money, but I think a lot of people that are worried about that 0.25% change in the interest rate are the same ones that are grabbing, a coffee and sitting in a drive-up line to get that coffee, or, ordering in a lot or getting a lot of deliveries. There's nothing wrong with that. But I believe there's a lot of ways to save a 0.25%. And if you can get it at the interest rate, that's great, but you could also get it in some just lifestyle choices. So there's a lot of ways to get that mortgage payment where you want it, by just making a cut here and there or having more available cash. And I think we know how to do that. What gets a little bit more interesting is there's a lot of mortgage companies right now that are offering something, some sort of incentive, that if you purchase on today's interest rate, that you could refinance down the road at a preferential cost. What that usually looks like, and I'm familiar with a few companies doing it extremely well right now, you purchase on today's rate, whatever it is. If there's a more favorable rate in your mind in the next 5 years, then you can refinance the property and they'll waive the lender fees. Now, I want to be careful and say that they'll waive the lender fees, but it doesn't make it free. In most cases, when you refinance, you're going to have to pay some closing costs, some processing fees. You may have to repay the title. You'll get some credit towards that, but there's some fees that are involved that are unavoidable. You can, in most cases, roll those into a new loan. It's about the only time you can roll closing costs into a loan. But if you had a $250,000 loan and there was $5,000 in closing costs, and maybe the bank picked up the fees, their lending fees, you could refinance it, $255 or something like that. And if the rate's lower, your payment will go down. You owe a little bit more, but it'll come out in the wash in a year or two. If you are going to refinance, rule of thumb, can you save at least 1% in the interest rate? And can you pay off the closing costs in a year and a half or 2 years? That's what most people would look at. 2% would be great if you can drop the rate 2%. But if it's 1% and you get all those fees back in the first year and a half, that almost always makes sense, as long as your time horizon is such that you're going to be in the house for a while. If you're going to sell within the next 2 years, I don't know many people who would refinance it, because you won't have enough time to get the money back you paid in fees at closing to do the refinance. And hopefully, as you are, if you're looking at that, the lender's going through a time horizon, what's the break-even point on that? If you're saving a significant amount of money, $150 a month, and you're getting back, $1,800 a year, let's say, $3,600 costs could have brought back to you on a lower payment over a 2-year time period. That could be a win. Could absolutely be a win. So I just want to, as we talk about interest rates and the effect on the market, I think a lot of people have held themselves hostage, waiting for rates to go down and living in a home that they don't want to live in, or paying for a home that it doesn't work for them anymore. If you're cramming 8 people in a 2-bedroom place because you blended a family, you've given up some money in the name of, but given up quality of life. I think most people will, if they really thought about it, for what they spent for entertainment or going out, having the right house, whether it's bigger or smaller, as long as it's a better fit today, it might be a pretty easy decision to make the move. And there's a way for it to come out over time with changes in interest rates and refinances. But nobody's going to remember 10 years from now, if you paid an extra $50 or $100 a month for the house, they're going to remember we were cramped or uncomfortable, or 2 people living in 6,000 square feet because the kids all moved out. And I think that's what we really want to look at, is the house the right home? It's the right size. Today, we all know stories where the house was perfect when they bought it 5 or 10 years ago. It doesn't match the needs today. I think that's the driver for most people moving. The usual getting married, getting divorced, baby being born, somebody passing on, job transfer, relocation, wealth building, adding a home in the investment portfolio, and moving out of your home, renting that one out, buying the new one, all those things. Those, I think, are the reasons that most people move. The flippers and those that do the renovations and the investors for rentals, it's a little bit different, but I think most people would look at that. So, bringing it full circle back, interest rates, they're going to change next week and the week after, and I think you'll see a couple of moves with the Fed before the end of 2024. I think you've got 2 moves for 50 basis points total is what I believe is going to happen. I'd like to be wrong. What if they came down a lot more? That might be fun. But that's what I got for you today. So if you have questions about interest rates or not quite sure how it works, drop me some questions below. Definitely click and subscribe. I'd love to be able to talk to you more about things that matter to you. This is Ron Wojciechowski for the Black Hole of Real Estate.